What's good? What's good? Welcome to another weekend watch list. Ideas for the coming week. I'm Winston, and let's get into it. Uh, you know how we do it. Let's start with SPY, which had a huge dump last Friday because of the announcement of a new COVID vaccine. Right? We were already watching SPY, but puts below 466. Last week, that was the level we were looking for it to break below 466.23. And Friday, when it dropped, when it fell, it got below that, and then kept going down. But the level that we were looking for it to break was a good level, entry for puts. And we got that. Now we have this 1, 2, 3 on the weekly, and we're back inside of a previous broadening formation. And the next idea is, where could this keep going? And right now, even with looking at technicals, I want to say that it's going to be difficult to determine where this could go, for the simple fact that we don't know how this new corona variant is going to affect the market. So that makes it, for me, it makes it really hard to look at things like the intraday, so basically the daily and lower. So for this watch list, I'm mainly focusing on these weekly and these monthly time frames. Reason being is because next week also it opens up a new week, but it also opens up a new month. So these monthly candles, these monthly opens are going to be extremely important, which is another reason why I want to focus on the weekly and the monthly moving forward. So like I said, with SPY, last Friday we fell back inside of an old broadening formation. And if you look at the monthly, we have 3 up, 2 up, failed. We've seen this pattern multiple times. We've seen this pattern play out multiple times. We know the setup for this pattern. We know what the next most likely to usually is, right? And if you don't know, here's the chart. Here's the cheat sheet again. 3, 2 up, failed because it's red, right? The next most likely to is a 2 down. So going by the strat, right, and looking at potential setups, this is telling me that next month I should watch for puts below 457.77 with a monthly target to come all the way back down to 426.36. Now, do I think we'll fall back to 426.36? Unlikely, unless we have, a pullback or something else major happens. But the likelihood of us going down, is seeming kind of high right now. On top of that, we have a red week, we have a red day, we have a red 4 hour. So we have full time frame continuity to the downside with every chart except for the year right now. So I think we're setting up nicely for puts right here on SPY if we don't bounce. Keep in mind that it has support down here at 453.55. So if SPY breaks that support level, look for it to go lower. Next, we have QQQ, which also sold off because of the news. But if we focus on this weekly and this monthly, it broke below, a level that we were waiting on, right? Last week, we were looking for puts below 392.92, and we got that. The target we were looking for didn't quite reach it, 387.53. It bounced before that with this inside 1 on the 4 hour, and then this little rejection right here with this wick on the daily. But just like with SPY, on this monthly, we have another setup for puts, right? With 3 up and a 2 up that rejected the highs. It's almost a shooter to the downside, right? So if we are focusing on strictly the monthly time frame and the weekly, right? Remove drawing. This is telling us to watch for puts. Watch for puts below 384.42, right? That takes us 2 down on the month. If we break that level and go 2 down on a month, our next target is right here at 373.56. And what you'll notice about that level, right, is it's halfway through previous month's candle. It's 50% of previous month's candle. So usually when that happens, once it breaks that 50% level, you start watching for it to retrace all the way to the lows, right? So 350.32 will be the lows for QQQ off the monthly time frame. Another thing about QQQ that I noticed, if you look on this weekly time frame, it's in a rising wedge. So what that means is it's going up consistently, but it's trading inside of a tight range, and the range is getting extremely tighter, right? So usually with these rising wedges, you see a breakout at some point. And with this particular wedge, you see a breakdown more so than a breakout. And I'm going to pull up an example in a second if I can find a really, really good one. Okay. Let's see. So here's an example. This should cover it. So rising wedge pattern, right? You see how price bounces around in between this upper level of resistance and this lower level of support. Eventually, after that range tightens to a point, it breaks down. So this is the setup I see. This is the setup I'm looking for on QQQ at the moment, because we're inside of that rising wedge right now. So if we break 384.42, look for price action to reach 337.56 with QQQ. Dow Jones. If y'all were trading Friday, then you know the entire market was affected by this new COVID variant, right? But there's no telling how this can unfold or what could happen because of this, if it worsens, or if companies continue to close their borders. We don't know how this could affect the market. But if you pull up Dow Jones on a weekly, last week we were looking for puts below 357.89, and we got that, right? We talked about that. It fell, knocked out 1, 2, 3, 4, almost 4 pivots, right? Found support down here at 347.73, which proved to be critical support. It's reached this level several times before and bounced. So now what we're looking for is either a break above that high or a break below it. And I don't think we're going to get a break above. I think we're going to see some more downfall because we fell right back inside of an old broadening formation, and it's looking to go down to the bottom of that broadening formation. You go to this month's candle, it's already 50% of the previous candle, right? And it's a 2 up. It's a 2 up, 2 up failed. This is typically a bearish setup. And from here, like I said, on the monthly, since we opened up a new month, this tells us to look for puts below the low. So look for puts below 347.36 with a target of 337.68, which will take us to the bottom of the broadening formation. That matches up with what we're thinking could happen on this weekly chart, right? So keep an eye on that. IWM. Now this is one I haven't looked at yet, so I don't really know what it's doing. Okay, same thing, SPYs, QQ. The market is just down. That's all it's telling me. The market is down. And then looking at this on a weekly, right? We falling back inside of a previous sex box, right? We were looking for puts under 232.39, and our first target was 228.89. Our second target was 223.50. This is what we were looking for last week. Well, if it were to reject and go down, and we got all of that on Friday. Well, between Thursday and Friday. Well, Wednesday, Thursday, and Friday. With IWM. Beautiful, right? We planned it, we charted it, we came up with a direction, and it fell through. So, well, not fell through, it went through. So these are the type of trades we like to catch. We want to be in this 2 up, 2 down reversal, 2 down continuation, right? And then if we go to the monthly is 2 up, 2 up failed. So there's this guy, I keep forgetting his name, but he has this strategy he calls the money cycle, and I'm trying to learn more about it. So I purchased one of his books. Cycles go through a phase one, phase two of rising, phase three consolidation, phase four is either another rise or fall back towards phase one. So basically, I think he says it looks something like, if I can draw a line, something like this, right? So you'll reach a point where you're rising, consolidation, and then fall, right? And right now, with this two up fail on the month and this two down on the week, IWM looks like it could go lower. It's breaking down to the bottom of that sex box. So moving forward, right, we're just watching for probability setups. The month is telling us to watch for puts below 219.64, which proved to be support. And if it breaks that level, right, first target is 216.76. Second target, 214.22. Third target, bottom of the six box, 210, right? So we'll be looking for two down continuation on the week, and then on month, we'll be looking for two down on next month with IWM. So that covers the big four. Like I said, we can't really look at VIX because, well, we can. Let's look at it. VIX, again, represents the volatility index. So this lets you know whether buyers are scared to put their money in the market or not. Basic way to think about VIX, when VIX is up, the market is down. When VIX is down, the market is up. That's the easiest way to reference VIX. Proof of concept, look at Friday. Look at Friday. VIX gapped up and ran. And what happened to SPY? SPY gapped down and fell. What happened to QQQ? Same thing. Gap down and fell. Well, it didn't gap down, but it fell. Dow Jones gap down and fell a little bit more. IWM gap down, fell a little bit more. So this is how I like to use VIX, right? I use it to gauge market direction and whether buyers are scared to put their money into the market or not, right? So remember that tip. VIX is up, stock market is down. So that covers the big five. Let's jump into the weekend watch list. The weekend watch list. So this week covers November 29th through December 3rd. And first thing, wait a minute now, hold on. First thing on the watch list is Snapchat. You know, I've been watching Snapchat for some time now, but there's some things on it that I like. If I can get this to open up. Cool. So I found Snapchat using my 1-2 down day scanner. I'm looking for calls above $50.24 or puts below $48.57. So let's take a look at it. Snapchat. And since we're opening up a new week and a new month, again, I'm only focusing on the weekly and the monthly time frames right now, especially since day trading has been extremely volatile as of late. So let's take a look at Snapchat's weekly, right? So on a week, we see 3 down, 2 down. But if you notice one thing about this 2 down, right? This 2 down is at the bottom of a broadening formation, meaning it's at a lower place of support, right? And this 2 down kind of looks like a hammer, right? And we know hammers can be bullish. So the reason I say calls above 51, 52 for Snapchat is strictly because of this 3-2 down hammer, right? I know I've seen this setup. I know what this setup does, right? And if you haven't, just pull up the cheat sheet, right? What's familiar? What's familiar about this cheat sheet? 3, 2, 2. 3, 2, 2. This is telling me that usually with this setup, we can expect to see, or we have a probability of seeing a 2 up next. So this is a potential early sign of reversal. So if we break this 51, 52, look for price action to come and retest the previous high before that, which would be 57.14. Now with that 57.14, right? If we were to break 2 up on a week and we hit that target of 57.14, and then we pass that target, it also activates, right? It triggers a 2 up on the month, which is why I have it labeled right here, 2U month. And if we trigger 2 up on the month, we have a reversal at the bottom of the Broadening formation, and we'll have a 2 down, 2 up bullish pattern, right? So then our next target is to try to come up and to the top of the Broadening formation, right? 79. Now, that's not to say we're going to reach 79. You can always find smaller targets by looking at the lower time frames, and we do have smaller targets. So if you see that the next target above 2 up month would be right here at the beginning of the gap at $60.78, and then your next target would be to try to fill that gap up to $69.82. So definitely watch for calls this week, but I know if the rest of the market pulls back, if things, don't change or update with this release of this new variant, you can watch for this to fall as well, which is why I said watch closely for puts under 48.57, taking us 2 down on a week, and possibly taking us 2 down on a month. If we break that target, right, we break that support at the 48.50 range, right? We break that support. Our next target is down to $43.61, which would be crazy move for puts, right? So that covers Snapchat. Next on the watch list, we have OXY oil. I found this using my 2-2 down day scanner, and I'm looking for calls above 29.88 or puts below 27.85. And here's what I saw on Oxy. OXY. All right. Again, we're opening up with a new month very soon. So these monthly time frames are going to be extremely important, right? On the current month, we have a 2 up, 2 down rev strat. This is a bearish rev strat. This could be the early sign of a reversal to the downside. So this tells me to watch for puts underneath that 27.85 level. If we break that 27.85, your next target is all the way down 24.39. So that's $3 moves, right? $3 puts just off looking at this monthly time frame. And you see that we rejected, right? We got this 2 down right at the top of a broadening formation. So right at the top of resistance, right? Right at resistance points. And then after the monthly, you scroll down to this weekly and you see this sort of triple top pattern forming. And we've seen this before. We saw this back with Twitter before Twitter fell. I'm gonna pull it up later. But Twitter had a similar setup with this triple top. And what I mean by triple top, I mean 3 points where price action reversed at the top of a range, right? And then fell back to the bottom of the range. So if this triple top does play out and we break below that 27.85 and we have that true triple top, right? Look for price action to come down to those levels that we were looking at, 24.39 and possibly even lower. Then when you scroll down, I added the MACD back to my charts. Yes, I did. I'm not an advocate of many indicators, but I was starting to miss my MACD. So I added it back. You scroll down, you look at the MACD, you see your signal line is crossing below your yellow line. So this is another indicator, hey, price action is falling. It could be falling. Watch for a reversal. So I'm definitely watching for this reversal down on Oxy. Now here, I did take a look at this daily time frame, but only because of this, right? Intraday, we're looking at the weekly and the monthly. So we're looking for, that's with time. But intraday, right? We pull up OXY. OXY has a hammer day, right? And it has a gap that could be filled. So this made me curious. This made me say, yes, even though it's set up for puts on a weekly and a monthly time frame, intraday it could have a little bounce before it falls, right? So potential setup for some day trades, right? If we break 29.88, you can look for a gap fill up to 31 before it decides, whether it wants to continue up or reverse down and continue this triple top setup that we have here on the weekly, and this 2 up, 2 down reversal that we have here on the monthly. I would say I'm not really interested in day trades this week because of how the market has been moving and things that's going on in the world. So I'm definitely starting to look at things more further out to give myself more time on these trades. And I think that's a smart strategy moving forward. Next on the watch list, we have Oracle. Wait, before I do that, I just want to pull up Twitter real quick. Let's see if we can find that triple top setup. Man, how far back was that when we saw that pattern? Man, Twitter got beat up. That was a while back. But anyways, let's finish this watch list real quick. So next on the watch list, we have Oracle. I found this using the 3-2 down day scanner. I'm looking for calls above 94.08 or puts below 92.07. So let's take a look at it. All right, so on the monthly, right? We have a 2-1 on the month, with this one being to the downside, meaning it's closer to the lows than it is to the highs, right? Or it's moving towards the low. And with us opening up a new month, right, very soon, this tells me to watch for puts below 92.07, or it tells me to watch for calls above 96.96. Since we're closer to the lows, I'm definitely watching more so for these puts below 92.07, with the first target on the monthly being 87.59, right? Scroll down to the weekly and you notice a few things. One, you notice this gray box. This was an area where price action was stuck at for some time, for several weeks. And it didn't get a break until right here, where it went 2 up, 2 up. And we broke outside of that range. We broke outside of this sex box range. We broke outside of the broadening formation. But as you can see, over the past 1, 2, 3, 4 weeks, price action has slowly fallen back inside of that range. And we have a 3-2 down, right, on the weekly. With this 3-2 down, right, and with this fall back inside of the broadening formation, and with us falling back inside of this range where price action consolidated, right, to me, this is looking more and more like a bear setup, right? To me, this is saying price action could fall back towards the downside of this range. So we just have to wait for triggers and breaks, right? So if we break that 92.07, right, it not only makes a 2 down on a week, but it makes a 2 down on a month. So after those are triggered, we know where the next target is. The next target is previous lows. So on the weekly, that would be 88.96. And if we break that 88.96, our next target on the month is 87.59, right? So definitely want to watch for those levels. On the other end, if let's say Oracle would have put out some very bullish news, get some extreme price target upgrades, or price action just reverses, again, we want to watch for those calls. I'm watching for them on a weekly more than anything. Watch for those calls above, what do we have the calls? Above 94.08. And I got that using this on the daily, being that we have a 3 here, we can watch for these calls above 94.8, with your first target being 95.52, next target being 96.96. But I think we're closer to the lows, and I think there are a number of things stacking against Oracle moving back up to those higher ranges, right? Next on the watch list, we have AMAT. We played AMAT before. We know AMAT's had a huge run up as of late, just like the rest of chip makers and tech and semiconductors, right? I found AMAT using my 3-2 down week scanner. And here's what we're looking for: calls above 147.18 or puts below 142.22. And here's what I saw on AMAT. So just like with Oracle, right? You start noticing, right? I'm looking for stocks with similar setups. That's on purpose. That's on purpose. I like trading similar setups, right? Let's start with this monthly. On the monthly, we had a beautiful run up, right? Several weeks back, before this trigger, we were looking for this move, this 1-2 down failed 2 up, right? So we were looking for calls above 142.22, right? Previous level for calls, and then breakout, right? So we were looking for psychological levels, 145, 150, 155, because it had never been to these highs. Once we hit an all-time high with AMAT, as you can see on the monthly, we rejected and came all the way back down, almost making a failed 2 up. But we still have time in this month, so this could very well still fail, and price action could fall back inside previous highs, right? So with this 2 on the month, right, this tells me to look for calls way above here, 159, which we're nowhere near, right? Or it tells me to look for puts below 136.42, right? If we break 136.42, you see that the target is way down here at the bottom of our broadening formation, at the bottom of the area where price action was stuck for weeks, right? Where price action was stuck for weeks, down to 123.17. So you scroll to this weekly, and you need proof of concept, right? Is the week lining up to take the month down? Is the day lining up to take the week down? So on and so forth. Go to this weekly, and we have a 3 down, 2 down. Now the difference between 3-2 down with a bull setup and 3-2 down bear setup is the rejection, right? We don't have a rejection on this 2. This 2 is not a hammer. This 2 didn't go down to 147 and then bounce back up inside of this 3. This 2 rejected. It rejected heavily, right? Rejected extremely heavily. So now, being that it did that, right? Being that it rejected heavily, fell back inside of a previous range, fell back inside of the broadening formation. This is giving me the heads up, right? This is telling me, hey, watch for puts, watch for continued puts. And then you take into account what's going on in the market, right? If trade shuts back down, if countries close their borders, how's that going to affect these tech companies? How's it going to affect these companies that's supposed to be making equipment for things to run and operate, right? You gotta think about the bigger picture here. So what that does, we was already looking for puts below 136.42, but if we look at this weekly, if we go 2 down on a week, that happens below 142.22. If we break that 142.22, what's the target? The target is our trigger for the monthly, 136.42. And if we trigger that month, the next target is 123. So early entry, 142.22, safe entry for the month, 136, but we have the setup, right? We have the chart is telling us what's happening or what could happen, right? And then more proof to the concept. You can come down to this daily, right? And look at the daily. We have a 2-1-2 to the downside. This is a bearish red strat. This tells us, hey, price action is reversing to the downside. And if it continues, watch for a break below my low. If it breaks 2 down on the week, right, on the day, that triggers 2 down on the week. So you see how these time frames kind of lining up with one another, giving us direction. It's all we watch for. Let the chart tell you what's gonna happen, right? All we can do as traders is set triggers and watch for those triggers to play out, right? And then set our targets, set our entries and our exits. That's all we can do as traders. For somebody to come in and tell you directly, this is going here, this is going there, this is going, they know exactly. It's a lie. It's bullcon. And we don't do that around here. We let the chart tell us what's going to happen. And then we react to the chart, right? So that's AMAT. If you were to watch for calls, or if this thing was to reverse, right? On the weekly, that reversal happens all the way up here, 152.98. We're far from that right now. On the daily, that reversal happens at 147.18, right? So 1, 2 down, 2 up. That'll be a bullish rev strat if it were to reverse to the upside. And if you haven't seen that pattern before, this is what it looks like, right? 1, 2 down, 2 up. So if it does reverse to the upside, watch for calls above 147.18, with your target being 152. All right. Let's see. Uh-oh. Next on the watch list, we have AMC. And you know, this was on the watch list last week, and it was on special mentions the week before. Same thing with AMC. Nothing has changed, right? Nothing has changed. I found this using a 1-2 down on a week scanner. And we're looking for calls above 44.43 and puts below 39.60. And here's what we saw on AMC. Right? We're still trading inside of this little flag pattern. We're still trading inside of this range, right? So we're looking for either a breakdown or a break above on AMC, right? But we've gotten neither yet, which is cool, which is cool. But I'm more so watching for this reversal to the upside. So if we scroll to the monthly, right, we have a 1-2 up failed. We still have time. We still got a few days left in this month, and price action is honestly, it's kind of scary low, scary to the downside, almost going outside month. So basically, this 2 would turn into a 3 if price action crosses below 34.53. If price action crosses below that level, if it goes 3 down, right, this month, or it sets us up for 2 down next month, right, that'll happen below 34.53. And your first target will be 33.67. Second target, bottom of this range, so down to 28.91, right? So watch for puts below that level. Hold on. Yeah, so puts below that 39.60 level. Wait. Why did I say 39? That's last week. I'm sorry, y'all. My bad. Apologies. Watch for puts below the 36.13 and then at 34.53. On the weekly time frame, right, we have a 1-2 down right at the top of our broadening formation. So if we were to continue to fall, I'm gonna have to go update the that watch list real quick. If we were to continue to fall on the weekly, right, and go down towards the bottom of that broad formation in that $28 range, right, that happened at 36.13, first target 34.53, second target 28. Now, if we were to reverse, right, and we were to get a 2 up, and we were to get this pattern right here, 1, 2 down, 2 up, right, which is actually what I would prefer, what I'm looking for to happen. Look for it that we'll break outside of this flag pattern, right, that we have on the weekly. And if we break that level, things could get very, very, very scary for AMC. You see our first target, if we break outside of that range, it's 52.79. Second target, 63.01. Target afterwards would be 72, right? And you see what happened last time we were in this predicament, right? This has happened before. It's flagged like this before. It flagged right here. We had a run up. We had a run up here, consolidation here, flag, right? So giving us that same flag pattern. And then when price action was ready, right? When it had a catalyst or enough buy environment, we took off, right? Pew! So we're looking for that to happen again in this current area where AMC is at right now. So again, puts below 36.13, calls above 42.99 for AMC. Next and last on the watch list, because we don't have an honorable mention this week, is eBay. I found this using a 2 up, 2 down scanner on a weekly. And we're watching for calls above 73.60 and puts below $70.91. So let's pull up eBay. eBay. So on the monthly time frame, we have a 3-1, right? It's this 3-1, one being the actionable signal, tells us as trader, hey, watch for calls above the high and puts below the low. So right now, based strictly off the monthly, right? You're looking for calls above 77.61 or puts below $70.91. Reason why I'm leaning more towards these puts than I am towards these calls. One is because this is a one to the inside one to the downside, because price action is closer to the lows than it is to the highs, right? Two, when you scroll down to this weekly, you see this rising wedge, right? We've seen this earlier. Price action is just bouncing in between this range, right? And with these rising wedges, the typical breakout you look for is a breakdown, right? A breakdown. We have this setup right here in our faces on eBay, right? So if we break below this $70.91, right, on a weekly, that also triggers a 2 down on the month, or depending on when it happens, it could trigger a 2 down on a month, and that'll give us a 3-1-2 down on the month, with our first target being $68.28, right? And if this is a true rising wedge, then our next target is going to be levels of support. So basically levels where price action reached the bottom of this range and bounced. So next target 65. Target below that, I don't think it'll be 55, but we'll say $60, then 55, then 51, right? This thing could fall off the face of the earth potentially, right? If this pattern carries out. Now, with that being said, we see bear setups, right? We see price action rejecting highs and falling to the lows, right? We would be fools not to prepare for the latter. We would be fools to sit here and say things only go down, right? Based off these charts. We don't want to play like that. So if things were to reverse back up, right, on this weekly, and we were to go 2 up, right, that'll happen above 75.19 on the weekly time frame. And then your first target would be 76.58. Next target 77.61. Target after that, top of this tightening range at $80.93. Scroll down to the daily, right? And you see that reversal will actually start, right, if we break above this 2 up fail. So above 73.60, your next target is that weekly trigger at 75.19. We trigger the weekly, we're going towards the weekly target, 76.58. So even though we're prepared for puts, we're looking for puts, we have set up for puts, we would be remiss if we didn't prepare for these calls as well. I would consider myself a bad trader if I didn't prepare for both sides. So that covers this week's watch list. I hope you guys, make some money, come out profitable in next week. I say be very careful next week with things falling, right, and extreme volatility that we had with previous weeks. I think we have some very strong setups, and I can't wait to see you guys in the charts, right? Other than that, I'm gonna catch y'all next time. So let me stop recording.